It's time to do business again. Welcome to 25 minutes of giving you updates from the world of business. And here's what we've prepared for you. In Libya, the central bank governor has resigned. Unemployment in South Africa is up. It has hit 33.6%. Inflation in Nigeria, expectations are high. In a couple of days, we'll get the official numbers. Welcome to the program. I'm Ini John McQuan. This is Business Incorporated. We start from the global oil space, where we see prices move sharply higher today because of dwindling hopes of U.S.-Iran deal to fully reopen the Strait of Hormuz, despite Washington's fresh efforts to boost fuel flows. So we see Brent is up again today, 1.71% in the green. We're getting close to $90 again. Unfortunately, WTI is almost 2% up at this time, $83.70, and gas tapers a bit, not following the direction of both commodities. It's dropped 1.4% to $2.76 a barrel. And of course, the U.S. seems positive about having a deal, but Iran doesn't seem to reciprocate that. And that, of course, has driven down sentiment of investors. And closely related to that, gold prices, they fell after hitting a more than 2-month high earlier in the session, as fading hopes for the U.S.-Iran peace deal is lifting oil prices and fueling concerns that inflation and interest rates could remain elevated for longer. So look at the numbers. Spot gold, 0.38% in the green, $4,436.20 per ounce. Spot silver is on the reverse, 0.14% down at $65.18 per ounce. And platinum is 1.35% up, $1,777.30 per ounce. Palladium is up 0.26% and the price about 1,385. Copper has recovered from what we had about this time yesterday. It's up 0.91% at $6.68 per ounce. Moving to other stories now, the governor of Libya's central bank, Naji Issa, has submitted his resignation to the country's rival legislative chambers. This is according to documents that have been cited. In the documents, whose authenticity was confirmed by Mr. Issa himself, he said that he could not continue in his post, but did not explain why, citing the sensitivity of the reasons. Mr. Issa said in the document addressed to the heads of the two rival chambers that he could not continue in his post, and he says he apologizes for not being able to continue his duties as a governor of the Central Bank of Libya, without stating the reasons. According to what he said, that they are very sensitive reasons. He confirms that it is an original letter in a message, declining to reveal more about the reason behind his decision. The two documents are dated August 9, and the two legislative chambers are the Eastern-based House of Representatives, elected in 2014, and the High Council of State in the West, which was formed as part of a 2015 political agreement, and whose members were drawn from a parliament elected in 2012. Libya has been divided since 2014 into rival authorities in the West and East that emerged from the chaos following the fall of Muammar Gaddafi in NATO-backed uprising in 2011. South Africa's unemployment rate has gone up for a second successive quarter to a 4-year high, potentially flagging fallout from the Iran war. The rate rose to 33.6% in the 3 months through June, from 32.7% in the prior quarter. And this is according to data released by Statistics South Africa in Pretoria. Let's head to the commodities market now. Women will be my friend at this time. We're talking wigs. Wigs in Nigeria, of course, it's become very necessary, especially if you're a career woman. You can hardly live without it. We have Onyeluka Chukwu Emefiele joining us now. Hi, Emefiele. Good afternoon. Welcome to the program. Why are we discussing wigs today?
Good afternoon, Ini. Thank you for having me.
So why
we're discussing...
Yeah.
Okay, so we're discussing about wigs today because we see that is a trend that has been existing right now, especially now, like you mentioned earlier, as a career leader, you really need wigs because you are very busy and you don't want, the number of time, the amount of time that you have to stay in the salon to make your hair, you can actually use that time to do something else. That's why people actually need wigs because it's used for as a means of convenience right now.
So,
Yes.
is this a source of another pressure on our FX? I'm trying to know if most of the wigs being used are made locally. Are they imported? What does it do really to our import bill?
Okay, so right now, most of the wigs here in Nigeria that are supplied are largely imported, right? And this is because the major input used in making hair is raw hair and it's gotten from Asia. Interestingly, Nigeria is currently the largest importer of wigs here in Africa and the second largest globally. So basically, because of this, where the price of wig is definitely linked to exchange rate. And right now, over the years, we've seen that the price of wig has increased because of the depreciation of the naira. So if you look at 3 years ago now, you see that the band of the naira was trading between 500 to 700 naira, and currently is trading between 1,300 and today currently 1,430 naira per dollar. So definitely there's a direct link between exchange rates and the price of wigs. And because of we import a lot of wigs, we don't really locally produce wigs here because the cost of production is high. Like I mentioned earlier, we need the raw inputs. And then there's some certain skills you also need when it comes to maybe lace placement, doing construction of the wig caps and all. And most of these things they're also outsourced internationally. And because of this, we see that the cost of wigs also is on the high. And concerning our import bill, because of the surge in the because of the devaluation of the currency has made because of the devaluation of the currency of the naira over the years, we've seen that the price has increased, which I mentioned earlier, and then due to increase in demand. So when we think because of FX has depreciated, demand will decrease. No, but right now demand is currently very strong because of Wix gives you Wix allows versatility and is very flexible and is very convenient. And so people still continue to demand, and that's why they continue to import. And I'm pretty sure that because of this, our import bill to it will be negatively affected, making it high.
All right, so you look at Chiku. Well, perhaps as women, we should form a bond that we should only use locally produced wigs, to help promote domestic production, in the country. But I mean, thank you so much for being on the show. You look at Chiku Emefiele, analyst with Financial Derivatives Company.
Thank you, Ini, for having me.
Now, in a couple of days, we expect to get inflation numbers from the MBS. What are some of those considerations and drivers? That's the conversation that we're having now. So we look at the major drivers of inflation in Nigeria. Food, of course, is at the top of it. Major drivers of inflation in Nigeria. Headline inflation, we know, is 15.91. That's what we had for June. We are waiting July numbers. So headline inflation at 15.9%. Food, a major one. Even though the MBS, they had, revalued the basket, and then they gave food a lower percentage. In spite of that, food has the highest. So food contributes 6.8 for the month of June, 6.37% of inflation number of this number that we have accelerated. We saw that 3.75 month on month from 2.98. Accommodation and restaurants, what did they contribute to this number? 2.06%. That's accommodation and restaurants. So you see there, food still comes out. Obviously, that's what we do mostly in restaurants. And then accommodation, perhaps your travels and all. Then we see transport contributed 1.7%. Logistics, housing and utilities contributed 1.34%. Education, less than 1%. Should we be happy that education is consuming or is contributing less to inflation, or we should be happy? Doesn't mean that education is cheaper or not. Well, I don't know. Health, 0.96%. And then we see for housing, water, electricity, gas, and other fuels, especially when you look at electricity, gas, and other fuels, you remember what's going on in the Strait of Hormuz between US and Iran. So year on year, that had 11.19%. That's this bulk. And then the percentage points contribution to headline inflation, 1.34%. And then, of course, we had that headline inflation, 15.91%. Let's get to understand this even more. I'm a journalist. We have a chief economist in the house, so you can expect that the level of knowledge will be different. We have Mr. Ayodele Akinwumi. He's the chief economist of United Capital PLC. Mr. Akinwumi, good afternoon. Welcome to the program.
Thank you very much. Nice to be here.
So let me start by asking, even though the basket was revalued, food, from your observation, is still the major contributor to inflation in the country, yeah?
That's correct.
Okay,
yeah,
all right.
Of the size, of the weights in the index.
Is that okay?
Well, you know, this is called consumer price index.
Yes.
In other words, you're going to look at things that consumers buy most, that they spend their income on. And that food is the major driver, and that's what we spend a lot of our money on. So that's why when you have a major increase in the prices of food items, then the consumer price index tend to go up.
So is it all right, if we can go to the other one that has education and health, is it all right to have education contributing less than 1% as well as health? Does it say anything about perhaps our level of development, or are we in a good place with this?
We should be happy that education and health actually...
That they are not expensive.
Yeah, they're not expensive for us here because they're as important as food. But if they are very expensive, it means that the common man will not be able to afford them, which is not good for us.
But at the present time, the common man can hardly afford these two major welfare driving factors.
Well, you see, the point is that when you look at it, you compare it with what we pay for abroad, we should be thankful to God and thankful to our government that education in Nigeria is actually very affordable. And even healthcare, very affordable. Yes, people travel abroad, you know how much they pay for that. In Nigeria here, if you have a good job, you have insurance, health insurance, that you go to the hospital, you have access to affordable healthcare without paying out of from your pocket. So I think it's quite commendable that education is affordable. Healthcare is also affordable.
At least their contribution to inflation is not
minimum.
as much. Okay, so we're expecting the numbers from the National Bureau of Statistics for the month of July. When we see all of these major contributors, what do you think will actually push the numbers for July? Because we know that I think they gather their data the first 2 weeks of a new month. So what do you think we know that we had a bit of calm, Iran and US, so that brought down the price of petrol a bit. But I don't know what happened with food and all of that. What does United Capital see?
Okay, thank you very much. So our team in United Capital Research, we usually go to survey prices during the course of the month and to produce inflation forecast ahead of the official release by the National Bureau of Statistics. So our number is pointing to the fact that we will likely have about 15.35 this for July. And the major drivers are actually part of the things that you have discussed. The issue of deceleration in food prices. In the month of June, we saw a lot of escalation in tomato prices because of the seasonal impact. But that price came down a little bit in the month of July. Then the issue of crude oil price, which also came down and also had impact in PMS, the petrol, diesel, aviation fuel, in the month of July. We saw that moderating the inflation rate. So, and that, of course, will impact transport costs, will impact logistics, and then which also will impact food prices, because the movement of those food items from the farmland to the market means that it will be cheaper, all right? And with that, what we are seeing is that there was deceleration and the moderation in the price of these commodity items in the month of July. And so we'll expect that inflation rates, the headline inflation rates, will moderate a little bit to about 15.35 in the month of July, which is, of course, a bit lower than the 15.91, which you showed earlier that was reported in the month of June.
Okay, so that is your observation for the month of July. We don't have the new escalation captured in there. So do we see this? I know that the next MPC is in September. It's too early for us to think that that would drive the decision, yes?
Yes, it's too early. We still have August number, and perhaps even prior to the MPC meeting, we may likely have a September, August number.
Yes, and then September.
At that time.
Normally to be towards the end of September.
Yeah, that we're going to receive that, yes. So we may not be able to say, yes, what MPC will do, but then we have some little direction based on what is going on in the country. We do not think that they are going to hike rates. We do not also think that perhaps the best they will do is to maintain the status quo.
Yeah, because we see tension again between the US and Iran. So even though we have seen the slight drop in the price of petrol, we don't know how long that will last. And as you noted, we still have how many months more, before the meeting. But, when we look at the biggest factor now, which is food, we talked about, a lot of Nigerians will ask, yes, United Capital is forecasting a drop in inflation numbers. And Nigeria will be like, well, so? How does that get to me? Does it mean that prices will be lower or what? Because we know that when prices are lower, it's because of harvest season most of the time, when you have a lot of production and all of that. So can Nigerians expect that this deceleration that United Capital is forecasting will actually be felt in their homes and their pockets?
Between you and I, it was felt by you and I in the month of July. You paid lower PMS price in the month of July than in the month of June. You remember that the prices of Dangote reduced the price, and therefore you and I paid cheaper. And that was what actually we are saying is driving the PMS price pricing the inflation rate that we are talking about. Going forward, what is happening now also, last week, they also reduced the price of PMS, which is also a major driver in inflation now. Yeah, of course, before the full devaluation, the deregulation of the oil and gas industry, particularly the downstream, you say that the movement in prices of crude oil prices globally was not affecting the price that you and I were paying at the filling station. But then because of the subsidy that was there before, government, irrespective of what the prices was at the international level, government was paying for that, the subsidy. But now, any little variation will be impacted in the price that you and I pay for it. And therefore, it means that we are paying more for that particular item, which also drives transport costs, logistics costs, and by extension, even though the price of food remains the same, once there is an increase in the prices of the things that drive the food prices, then it will likely add to the cost, and therefore that's what you are seeing now. But again, you see, if you look at January to date, we would need to also commend the government of the day for having foresight in supporting our own Dangote refinery. So you will say that inflation has just remained within the range of 15% this year, despite the huge increase in international crude oil price. Now, why? Because we are refining in Nigeria here. Early in the year, we released a forecast that by middle of the year, we will likely have single-digit inflation rates. But then because of the war that started in February 28th, that did not happen. Of course, energy prices went up. What we have been discussing now, in fact, affected all prices all over the world, and we are seeing what we are seeing. But then, the fact that we are producing here, we were exporting, Nigeria benefited from the increase in crude oil prices. We were able to get more revenue and then help to stabilize the foreign exchange market. And therefore, even despite the increases in some of those, the crude oil prices, we were able, the country was resilient, and we were able to augment for it in terms of stable exchange rates. And that's one of the reasons why we continue to support local content. And I hear you talking to the your guest that just finished before me that even the wig, if we produce these items in Nigeria here, it means that we are less responsive to the external shocks, and therefore helps to create jobs in the first place, and then help to moderate the consumer prices that we are paying for. So, and that's one of the reasons why we'll continue to support the government, showing them what they need to do to incentivize the economy, to incentivize entrepreneurs, to ensure that we produce things locally, increase local production, increase employment generation, and then ensure that price of items remain moderate.
Well, we certainly hope it remains moderate. Chief Economist at United Capital PLC, Mr. Ayodele Akinwumi, thank you so much for your time.
Thank you very much for having me. Thank you.
All right, let's head straight to the markets now and see what the numbers look like at intraday. For Nigeria, it's a negative 0.63% down in the red, unfortunately. For Johannesburg, it's also negative, worse than that, 0.82%. Egypt is negative, and NSE, that's Nairobi Stock Exchange, that closed positive yesterday. In the Middle East, we see that two of the markets are negative, and three of the markets are negative, while one of them is positive. The only positive one for this afternoon is Tadawul. Tadawul is the only one that's positive. Others intraday are negative. In the United States, just a little bit of change is what the market has recorded, and that's in Dow Jones. So S&P and NASDAQ, they are positive. And then we move to Asia. Markets are closed there. They closed mixed. For Tuesday, we saw Nikkei and Kospi positive, while for Hang Seng closed negative, more than 1% down, as well as Shanghai and Nifty all closed negative. Let's go to Europe now and speak with Chip to tell us what European investors are doing. Hey, Chip, good afternoon. What's the sentiment in the market at intraday?
Well, any European shares are subdued today as well, and they are really holding steady close to the record highs they reached last week. And the Stock 600 is only up 0.1%. The DAX is also up at 0.2% higher. And that's despite that impasse between the United States and Iran to reach a deal to reopen the Strait of Hormuz. Investors are, of course, holding off because there's a slate of economic data which is due this week. Eurozone employment, GDP data is also due. And then, of course, there's also U.S. consumer price figures later in the week. So investors are looking for clues on growth and the interest rate outlook. And of course, concerns that a prolonged disruption of the Strait of Hormuz are still ongoing, especially here in Europe, which is a net energy importer. Now, apart from the expected rise in energy stocks today, of course, with the situation in the Strait of Hormuz, European tech shares are also trading higher. The sector is actually up 0.5%, and the tech sector is among Europe's top performers this year. It is up 24%, and that is because European technology has also benefited a lot from the global AI story.
Yeah, AI story, good one for you guys right there. Well, away from the market, we had there's a story going on about water levels, and that the water levels in Rhine River have fallen to historic lows. There are concerns about this. What are the connected factors and impacts of this?
Well, we've had extreme heat in Europe this year in most parts of the continent, and the drought. And of course, there's also been those wildfires, and it's also been affecting Germany, of course. Water levels at what is considered the shallowest part of the Rhine River reached a historic low of 16 centimeters on Monday at noon. And according to local reports, ship operators have significantly cut their cargoes along the Rhine, in many cases to as little as a fifth of normal capacity. And the problem isn't limited to one part of the river, which flows from the Netherlands to Switzerland via Germany. Now, the head of Germany's Inland Shipping Association told a regional paper that the Rhine may become impassable before the end of the week, and that would effectively split the river into two for commercial traffic. And several goods, of course, are transported via the river, including iron ore, coal, sand, and petroleum products. And most of these goods are needed for German industry. And the German Economic Institute actually expects the ongoing drought to shave 0.4% off the country's GDP this year. And that would effectively wipe out this year's economic growth, which was, of course, expected to come in at 0.5%. So the situation is quite dire for the economy.
Yeah, and it's not just about Germany, it's EU generally, yes?
Exactly, Ini. One of the most affected sectors on the continent is agriculture. Agricultural production is expected to decline by as much as 7%. And that loss will, of course, lead to higher prices. And, of course, the transportation costs, which are going up, they also will affect, food prices in the end. So the expectation is that the ongoing drought could reduce the European Union's GDP by 1%. And that's according to a report by the Dutch bank Triodos. It says that will correspond to economic losses of around 180 billion euros. And of course, Germany isn't the worst affected country on the continent. Other countries, especially neighboring France, is expected to be hardest hit by the heat wave. That's the heat waves it has seen, of course, also with the wildfires, and it is expected to reduce France's GDP by 1.4%. Ini.
Wow.
So it is a very bleak picture. We've been enjoying some of the heat, but apart from more days to go to the lake or to the sea for those who are close to the sea, it's not a great picture.
Yeah, well, it's not a good one at all. But I can invite you to come to Nigeria, Chip. The heat is less here, and then
I will take you up on that.
All right, okay. All right, Chip. Thank you so much for coming on the show. All right, so now let's just run through the crypto space. See the price there at $64. It's down in 24 hours. We see the U.S. Securities and Exchange Commission that they're set to consider the new rules. The Senate has delayed that regulation bill, and that's putting it at risk. UK MPs are challenging banks over refusal to provide services to crypto, and Japan's hidden XRP strategy is about to make history. So history will be made in Japan in the crypto space. Well, that's how much we can take on Business Incorporated today. Thank you so much for being a part of the program. Remember, you can always go to our YouTube channel, and then you will get the program over and over and over again. I'm Ini John Mekwa, and I'm wishing you the very best of the rest of the day. Bye-bye.